Hello, Mike Kako. Going to bring this meeting to order. Welcome to the meeting on the Committee for Investments and Land Management for Wednesday, February 19th, 2025. I'm your chairperson, Keone Souza. We have Vice Chair John Wahe IV, and other members are present are. Can we get a roll call vote, please?
Trustee Akaka.
Ew.
Trustee Akina.
Aloha mai kako.
Wow.
Trustee Alapa.
Present.
Is Trustee Galataria here?
Bill.
Trustee Galataria.
Yeah, he's online.
Chair Kohele.
Present.
Trustee Lindsay. Vice Chair Wahe.
Present.
Chair Souza.
Leo.
8 present.
All right, members, 8 present. We have quorum. Mahalo for joining us here today. Joining the trustees today is Kapu'ana Stacey Ferreira, along with numerous support staff. I'm going to turn the floor over to Stacey to introduce the administrative staff. Mahalo, Stacey.
Mahalo, Chair, Vice Chair, trustees. Joining us a little bit late will be Chief Operating Officer Heiau Pu'u, and in person and online we have Endowment Director Ryan Lee, Interim Corporation Counsel Everett Ota, Interim Senior Legal Counsel Nichi Ozawa, Interim Director of Land Assets Lori Walker, Director of Communications Bill Brennan, Interim Information Technology Manager Kevin Chalk, and IT Systems Engineer and Administrator Kelsey Wade. Mahalo.
All right, mahalo, Stacey. This meeting can be viewed via live stream on OHA's website at www.oha.org/livestream. If you'd like to testify on any agenda item during the Zoom meeting, please raise your hand when that item is announced. When called upon, please unmute yourself. You'll be given the ability to turn your camera on during your testimony. Once you're finished, we ask that you mute your microphone. We're recording today's meeting for the sole purpose of producing written minutes, which will become the official record of this meeting. All right, now moving on to the first item of business, the approval of minutes from the Committee on Investment and Land Management dated January 22nd, 2025 and February 5th, 2025. Do I have anyone signed up to testify?
No one signed up to testify.
All right. Can I get a motion to approve?
Mr. Chairman, I'd like to move to approve the committee minutes of January 22nd and February 5th of 2025.
All right, mahalo, Vice Chair Wahe, and mahalo, Trustee Hulu Lindsay. Can I get a roll call vote, please?
Trustee Akaka.
Aye.
Trustee Akina.
Aye.
Trustee Alapa. Trustee Galataria.
Aye.
Chair Kohele. Trustee Lindsay. Vice Chair Wahe.
Yes.
Chair Souza.
Aye.
You have 8.
All right, motion passes. Mahalo, members. Moving on to the next item of business, unfinished business, seeing none. The next item on the agenda is new business. So we're going to receive, members, is an informational briefing by OHA Land Department, which is Lori Walker, on the following properties. First one's going to be Pahua, Heiau. And the second one is going to be Waialua Courthouse. And as promised, we're going to continue to review our legacy lands as well as our properties that we're working on and then moving forward to so we can get an update. So mahalo, Laurie.
Aloha kako. Mahalo for having me again.
Oh, Kalamai.
Oh.
I think we have one testifier
Okay.
in the queue. Is that Eric?
Yeah, sorry. Eric, did you want to testify on this item?
No, proceed.
Okay, mahalo.
Hey, mahalo, Eric. Go ahead, Laurie.
Okay, mahalo. Aloha members of the board and kapohana. We are here to present the second in a series of informational briefings. We are shifting now to our legacy properties, previously represented on our Iwilei properties. Still on Oahu, we will start in Maunalua with our Pahua Heiau property. Next slide. So this Heiau, for folks who are new, this property was donated to us by KS in 1988. It is ours fee simple. It is the first of our OHA Land assets. It is 1.15 acres in a residential cul-de-sac in Maunalua on Oahu. The function of this heiau is believed to be agricultural in nature. And our kuleana is to malama this heiau. We have a site steward that is contracted to monitor the site and maintain it as well. They are responsible for educating the surrounding community about the significance of the heiau. This contractor is also helping us finalize a comprehensive management plan for this property. The site steward regularly does outreach to the surrounding communities, different local organizations, as well as schools to bring awareness to this particular community about the significance of the heiau. Currently, we are planning some repair work to the heiau. So there was some rocks fell from the heiau, and so we're working with dry stack masons that are experts in cultural dry stack masonry that will be completed this fiscal year. Another project that is coming up is our public viewing area. This is a preservation plan recommendation that a public viewing area be constructed to create a buffer between where the public can stand and view the heiau itself. And that helps to mitigate one of the major challenges at this property, which is trespassing. Some members of the public use this property to get to a hiking trail, and it's not a hiking trail. And so we want to create physical boundaries to address that challenge. Also coming up, we are focusing on expanding outreach with educational opportunities. Our intention with our legacy properties really is to develop more community awareness and accountability of the legacy properties that we own and are responsible for. Yeah, that's Pahua.
Yes, I wanted to know who's the site stewardship.
So the site steward that we're working with, their name is Digital Moku. That's the company name. The human's name is Anne Marie Kirk. She's from that community, and she does. We actually were working with her previously. She would do talk stories at the site, so she knows the site pretty well. There's a associated heiau in Mauna Lua called Havea Heiau, and she helps to do education about both of them.
Thank you.
Mm-hmm.
Right. Any other questions, members, on Pahua Heiau? Chair Kahele.
Thanks. Oh, sorry, regarding its stewardship agreement, can you brief the board on how we addressed at the time what was noted as lax oversight of Digital Moku's stewardship, community engagement practices, lack of insurance and proper oversight from the land division?
Yeah. So I think the contract that they're under now has changed in scope. And a lot of the gaps between COIs, certificates of insurance, that were identified in the audit, I think we recovered some of that data after the audit was performed, and we were able to close some of those numbers. So there was a certificate of insurance available at some of the gap period that was identified. I can't remember specifically for Digital Moku's contract, but we have improved our systems and internal processes for tracking those COIs to ensure that they're covering the full course of their duration of their contract. And I can get the information for the gap period, but I know that we closed some of those numbers post audit.
So they're currently in compliance.
Yeah.
They have a current valid certificate of insurance.
Mhm.
They, in addition to that, they name OHA as an additional insured on their certificate.
Yeah, so we work really closely with our procurement and corporate counsel to make sure that the procurement component and contracting components are securing us from both ends.
How long do we amend or renew stewardship agreements? Is this something that's done year over year or?
That's also, I think that was also another audit recommendation to ensure that we formalize our performance evaluations against our contracts. And so that is a activity that we're starting to implement to formalize our performance evaluation criteria for each of our contracts to do annually and make sure that they're performing and that our renewal is supported by criteria against their requirements and deliverables of their contract.
So OHA is, we're protected in terms of liability.
Yeah,
And maybe
per their
legal
contract.
would
Mhm.
weigh in, but those issues have been addressed and we're not held harmless for anything from the stewardship managers that access the property and access OHA's properties.
Mhm. Yep, we're improving those processes for each of our properties.
Okay. Thank you, Chair.
Mahalo.
Sorry, great questions, guys. If there are no other questions on Pahua Heiau, we'll move on to Waialua Courthouse. Laurie? Oh, Kapuana.
I just wanted Lori to share with the board to just springboard off of Chair Kahele's question. Can you share what our land agents do in terms of their site visits? Because it's not just about a checklist. We want to ensure that we have, boots on the ground,
Mhm.
making sure that we have visual, we can validate that activities are happening,
Mhm.
stewardship is occurring. Mahalo.
Yeah, so each of our properties, depending on the degree of, I guess, involvement, the type of property solicits. There's a frequency that our land agents will go out and monitor the site, make sure that just general security is occurring, that the contracts that we have are being performed or substantially, that's the word I'm looking for, that the criteria or the requirements of the contract are being met. And so we have site monitoring activities that occur weekly for Pahua and at the other properties at a different frequency. So our land agents are also providing that extra layer of assurance.
Mahalo, Laurie. Trustee Galutero.
Thank you, Chair. Can you hear me? Okay.
Yes, sir.
Okay. Hi, Laurie. Aloha.
Aloha.
Once we get through all of the legal and do we have an inventory of all of the heiau that fall under OHA's jurisdiction? And is it available to those who may want to visit all of the heiau that we have in our inventory?
Yeah, I think we haven't categorized it by Heiau yet, but I believe we have two.
Oh, okay.
There's one on Maui, and then we have our Pahua Heiau. There was a documented heiau that no longer exists at Kukaniloko or at our Waialua lands.
I see.
But definitely something we can put together.
Well, yeah, if we don't have that many, I was just wondering
We
how
don't
many
have
we
very
do
many,
have,
yeah.
and if we are encouraging for our inventory to grow. But that's neither here nor there. I just wanted to know how many we had. Okay, thank you. Mahalo.
Mahalo.
Mahalo, Trustee Galutero. Trustee Akaka.
The part where it says to control unwanted human interaction, that's what's contracted. Can you folks share on what kind of unwanted human interaction has been happening through the years?
So yeah,
Climbing,
yeah.
photo taking?
Well, not necessarily the photo taking. This one doesn't have a kapu on it. This heiau doesn't. But definitely standing on it and playing around it is not wanted. It's not
Mhm.
welcomed. And so we do currently have more of a regulatory sign. The general kapu is how you behave around a heiau, and part of the public viewing area, in addition to the irrigation and new landscaping and fencing, there'll be a interpretive sign that talks about the history and the appropriate way to behave around a heiau. And so trespassing to get to a hiking trail is not welcomed. Interaction, playing on it as if it's a playground, not welcome interaction. And so the public viewing area specifically is intended to mitigate that type of activity.
Has it been discussed what type of contracting would be done in terms of, let's say if it's like roped off, would it be like traditional cordage with tea leaf hanging? Or is it something obvious or something a little understated where people, malihini included, would know this is
Um,
space not to?
For the public viewing area, we actually contracted a landscape design company to help us design it, and that design has been permitted already. And this, because it's a historic property, we were required to get SHPD's consultation on it, the Historic Preservation Division's consultation to approve like the materials that were used in the design, and the distance from the actual archaeological feature. So those types of things are pretty heavily regulated, and that's how.
Would you
we-
say it's similar to how it is in Waimea Valley? What the signage would be like and
I think we use different case studies to inform how we design the signage. We have signage at Waialua that we already use, and we have interpretive signage at Waialua and at Waialeopuna that we've installed that'll probably model. This signage will probably be modeled after, but it's all informed by SHPD's regulations.
thank you.
Um,
One more question too. When you had discussed the genesis of how we came to steward these lands and how they came in the 80s via Kamehameha School, then Bishop Estate, do you know the reason how that even came to be?
Yeah, good question. I don't off the top of my head, but I know that there is literature around it. We talked about it this morning. I believe that Kamehameha Schools at the time was trying to resolve management of some of their legacy properties, and so OHA was. I'm gonna misname the trustee that accepted the property or signed off to accept the property, but OHA was the selected organization.
Mahalo.
Mahalo trustees, great questions. And Laurie, just for homework, getting back to Trustee Galatera's question, let's check on the accessibility of these different heiau that we steward. And I would encourage the island trustees, maybe in the next community meeting, we could set up a site visit if it's possible to enter. And yeah, so.
That was something I was contemplating when going over this packet. As this hasn't been an option to visit during my time here. So it's interesting to learn what we're learning that we didn't know previously.
I know this came up almost 2 years ago now. I remember when we had a conversation with Land Division, this came up. And so I know this, and again, no action item members. This is just for informational purposes. And so, which raises great questions like you guys had today. So mahalo, trustees. Mahalo, Laurie. Thank you so much. That is the end of the presentation for Pahua Heiau. We're going to move on to number 2, Waialua Courthouse. Anyone signed up to testify? Just to check.
No one signed up to testify.
Okay. Please proceed, Laurie. Mahalo.
Okay. Okay. So in 1998, we entered into a ground lease with DLNR in the acquisition of Waialua Courthouse. We do not own this property, but we are the ground lessees. It was previously vacant, and it was acquired to provide a base for our beneficiaries on a more rural side of this island to be able to gather, meet, plan, practice, and engage in cultural activities. So a space for our beneficiaries to be able to do programming on the North Shore. We are, as lessees, responsible for the maintenance of this building and this property. We have a site steward here who is responsible for property maintenance, landscape, and various programming. They are also helping us to develop a comprehensive management plan for the property. This site steward is Ola Kamananui. They are very well connected to the community on that side of the island, and so they're very effective at bringing our beneficiary base to the courthouse and holding space, hosting events, facilitating for various groups to hold events there. Some of the events include civic club membership meetings. Various health organizations have done presentations there. They've also hosted a Maoli Makers Market that was very well attended. This site steward also acts as a very consistent presence on the site, which helps with mitigating other unwanted human interaction at this site. Some of the projects that we're working on include there are multiple repairs required at the property, including and probably most urgently the roof on the pump house, a smaller building to the rear of the courthouse. And the roofing has been deteriorating, and then recent storms have created more of an urgency to repair that. So we'll focus on those more urgent repairs in the upcoming fiscal year. And then we also have been approached by our site steward with a potential revenue generating opportunity that will improve the parking situation there through a paid parking system. There are new entities opening up around on Kamehameha Avenue, and so this sort of the parking gets filled with that, and it's unauthorized, and so the site steward is tasked with regulating that. But if we welcome it and can create a profit from it, it can help to support some of the activities and operations that occur at the property. So we're exploring that opportunity right now. And then another project, Be Hawaii, approached us with a lei plants and trees project to increase harvest locations for lei makers on Oahu. And so there's some happy projects that we're engaging in as well.
Hello, Laurie. Members, any questions? Chair Kahele? Chair Lindsay? Trustee Lindsay?
Laurie, who is Ola Kamananui?
Yes,
I
so
mean, sometimes we're given nonprofit names, but we want to know who's behind it because they can make up any kind of names and, we don't know. So we want to know who we're dealing with.
So Maka Kasan Fisher is, I think he's president of Waialua Hawaiian Civic Club or Civic Club of Waialua Hawaiian Civic Club. And his wife, Napua, she's in the picture under the Maoli Makers Market sign there in the yellow.
Mhm.
They are the two principals of that organization. They've been at the courthouse since we were subleasing it to
Waimea Valley.
not Waimea Valley, to what is our subsidiary? The LLC, yeah. Hiipaka, yes. They were at the courthouse previously. And Ola Kamananui wasn't named that, but Maka and his wife had been operating out of the courthouse previous to that. Yeah.
I just wondered where was the transition between, I knew that it was under Waimea Valley and I wondered when did it transition?
It transitioned during COVID. So when things started to shut down, Hiipaka terminated their sublease with us in the beginning of 2020.
Mm. So one more question. At one time, it was being suggested by administration that we give up that lease. And I just want to reinforce that we should never give up that lease. Because anytime the LNR give us any kind of land, we should hold on to it for whatever
Lease.
we can utilize for our beneficiaries. I think this is a really good use of the property, to have the community using it, civic club, hula halau, the night market or something like that they have going on. That's a great idea. So I just wanted to share.
Mahalo.
Mahalo, Trustee Lindsay. Chair Kahele.
Thank you. Same questions on the liability piece, but before we get to that, when does this lease expire? And just for context, right? This is a deal on our property.
Yep.
Deal on our owns the land.
Mhm.
It was conveyed to OHA around 1998, along with other lands like the
Mhm.
Kikaha Armory. We have a 35-year or so lease.
Mhm.
When does the current lease expire with DLNR where potentially the property will go back to DLNR?
2033.
It's 2033,
Mhm.
okay. And we currently sublease to this organization.
We previously
Are we-
subleased to Hiipaka, but now we are contracting a site steward.
Okay,
Mhm.
okay. And then in terms of my previous questions with the Heiau, can you give us just an update status on that? Obviously, there's a lot of people that utilize
Mhm.
this facility. It
Yep.
looks like an amazing location. Hopefully, Trustee Akaka, we can go visit this on your moku one day.
Well, one question I was gonna have to follow up with that is, do they have working Wi-Fi?
Yes.
Where we could live stream?
But anyway, for the liability for OHA and certificates of insurance and all that piece, can you give us an update on that?
I do remember this one in the audit. I don't remember the exact numbers, but I do remember this one because there's a question about presence on site during COVID. So there was a gap during COVID where the doors were closed and people weren't accessing it. And that was largely the period of time that we didn't have certificates of insurance for folks accessing because they weren't accessing the entirety of the time. Since then, though, we have the contracting of the stewards has shored up the requirements that we have and liabilities. So we have their COI, they are contracted with specific scope and requirements to meet in order to continue.
We're named on their policy.
Yes.
We're not
Yep.
held liable.
Yep.
Okay. What about the final question? Thank you, Chair. The various repairs, obviously, things take maintenance, things cost
Oh,
money,
yeah.
right?
Yep.
This is one of those properties that
Yep.
is probably in the red. It doesn't make us money. So how are we budgeting for that?
Yeah, so we're working with our site stewards. They're physically there. Our land agents also go there and do their regular site monitoring to verify what repairs are most urgent, prioritizing those, and what are the lowest hanging fruit to make this a functional space. I will say one of the recommended repairs is the parking. So the trees that are there, their roots grow into the parking, and so the parking is uneven, and kupuna that go and walk, like it's not a even, yeah, it's not a level surface for them. That is a high dollar item. In 2019, I think we got a quote for 115,000, and that was 6 years ago already. So it's definitely a higher cost now. We've postponed the implementation of the improvement of that. We did get a design for it, which we were able to build the quote from, but
Okay.
some of that to offset that, we offset that. And the reality of all of our legacy properties is we're trying to look at different economic streams and revenue generating opportunities to make our legacy properties self-sustaining to a certain degree, because we know that is tough. Yeah.
Thanks, Chair.
Chair Kelly, great question. I have one question before I acknowledge Trustee Galateri and Stacy. Talk about shared costs with the LNR. Is there any type of agreement?
Not at this time, and this maybe is something we could negotiate if we wanted to renew a lease, but yeah, not at this time. I think it's
Okay. And 2033 is what you said?
Mhm.
Okay. Trustee Galateri.
Okay, thank you, Chair. This is more of a encouragement than a question. As we move, I'm taking a look at the current property activities and want to encourage our administration and the growing community activities division to utilize this property as a central space for our programming, the programming that OHA supports. And not that we don't support the hula halau or the civic clubs, but we have internal programming, civic engagement, whatever it is. We would like to see this particular space utilized so that it's everything that it can be. And that's basically my request of the programming division, that we utilize it to its full potential. Okay, that's it. Thank you. Mahalo.
Mahalo, Trustee Galateri. Kapuana.
Mahalo, Chair. So I think what's before the trustees is really what is the cost benefit of the property? Because, you know, as Trustee Lindsay has talked about, you know, there's a lot of community engagement that's currently happening. But because we are on a lease with DLNR, there may be a consideration for the body to talk about the potential transfer. Because OHA will continue to put in a lot of money for infrastructure to keep it safe. As we continue to encourage community to use the property. And really, you know, to what Trustee Galutieri is saying, is we need to find revenue generators. So we need to strike a balance of allowing our own programming, communities to use it for free, but then we also need to get monies, you know, so that we can continuously keep that infrastructure up to date. Maka Fisher, who is the new vendor, their community steward, he actually came from HTA. I don't know if you remember him, but he was very active in FestPac. And so I'm very encouraged that, you know, his experience with HTA, we can look at the visitor. I mean, that's the foot traffic out there, right? Is a large visitor industry. And thinking about how we can repurpose the properties when our communities aren't using it, how we can drive other revenue sources to the property. But I would really like to encourage us to think about maybe in the near future, talking to DLNR about the transfer of the property, because we're lessees. So something to think about.
Trustee Lindsay, did you have a question? Okay, Trustee Waihe.
At that conversation, you would think that it would have come up.
I did question it when I came on, because when just at face value, not talking about all the different programs, there's no real historical or cultural significance to the Office of Hawaiian Affairs, right? As a site that you would typically find in our portfolio. So again, just thinking about, you know, why do we have it? What was the history? I'm not sure what the previous Pohana or even prior to Sylvia, I'm not sure what the decision making was, but I do think it's an opportunity, as we are already engaging with the governor's office, with DLNR, that there may be an opportunity, since we're already putting lots of money and we'll have to upkeep this property, that maybe we go from lessee to actual title holder.
Great idea, Stace. Trustee Lindsay.
I can add a little bit to that. I kind of know that was an opportunity for that part of the island to have a place where our beneficiaries can go and utilize exactly how we're utilizing it today. So I think it was an opportunity that the board at that time thought that, you know, we should take it because they didn't know what to do with it. My question to Lori is, how big is the acreage around the courthouse?
Good question. I think it's about an acre total, the whole property.
So they expect to plant plants on the vacant part of the property?
And then right around the courthouse, there's like native plants at the bottom. Yeah.
That's a great idea. Thank you.
Mahalo, Trustee Lindsay. Trustee Akaka.
Is it set up where meetings can be had with, where we could live stream or Wi-Fi and all that kind of stuff?
It's very advanced technologically. I wanted to share that there has been discussion about divestment from our portfolio of this because it is a little bit of an outlier. There is a lot of history in the courthouse activities itself when it was an active courthouse. But I think what we are able to do successfully as an organization in partnership with Olaka Mananui is continue to hold it as a Hawaiian space on the North Shore, where there's fewer and fewer of those spaces out there. And so that is one value that it does bring to us as an organization.
Members, any other questions? Trustee Alapo.
How much, do you have an accounting of how much money that OHA is paying for all these expenses that are being incurred?
We do, yes. And I can share that with the board more formally, but we did for the courthouse, it's been around, let's see, in FY21, it was around 7,500 for the year. Of course, that was COVID. There wasn't a lot of activity. FY22 as well, 27,000. That year, I think there were a couple more improvements, like flooring. We redid the flooring, I think, that year. And then in FY23, it went back down to around 7,000. And then last year, we replaced the roof. So that's that main picture up there. That was a big project, and you have to get any changes that you make to the building approved by SHPE because it's a historic building. Long process, not cheap. So that year we expended 184,000. So it does get pricey. And so we are mindful of that and trying to be strategic about which improvements we make while it's in our under our purview.
I'll go ahead then. I'm going to call upon Trustee Akaka.
Of the square footage of the building, I don't know that my staff might text me while we're having this discussion, but I don't know the square footage off the top of my head. Yeah, so we talked about the establishment of a paid parking system. Our stewards brought an opportunity to us that we are considering working with Corp Counsel to make that a viable stream of income. Lots of traffic there, lots of need for parking. A new Billabong store was opened across the street, and so we foresee that the parking will be utilized unauthorized, and so.
A follow-up to Trustee Luana's Alapo's question. All revenues and proceeds will come to OHA
Yes.
at that time from the
That's,
parking.
yeah, yep,
Okay,
that's the intention.
got it.
There have been opportunities to have the square footage, 2,000 square feet. There have been opportunities for different movie production companies, because it's an old building, and what we without having like a mechanism for funding in place or for receiving funds in place, we were able to trade some improvements to the property. So when they came in and set up for their shoot, they were able to improve some of the details in the building. So improving like the transition on the floor from room to room, the jams around the doors. So certain, like, we don't get the funding from it, but we get the work done for it. I think it depends on the vendors that we partner with, that they can extend it into the parking lot, but there is such few parking is so few and far between on the North Shore that if an event occurs there, it's more, it's more useful as a parking.
Trustee Akaka.
Has there been a case study or some kind of small to large investment in looking at how much revenue would be generated week to week, month to month, year
For
to year for the parking?
Yeah, so that's what we're looking into right now. I don't have numbers to share, but that's all part of the due diligence that we're doing to engage in that.
You had mentioned Billabong and parking, people who might frequent those stores. I do understand though, just within the last week or 2 weeks, Billabong, Volcom, and Quicksilver have announced that they're closing all their stores. So I would imagine that that would affect that potential set of revenue, but I would imagine, given the foot traffic and popularity of the area, that I'm sure another a retailer will step in at some point or another.
Yeah, I don't think that the spaces stay closed for too long.
Yeah. Yeah, I'd be interested to know how much it generates. At first, when I saw that there was looking into paid parking as a local person born and raised in Hawaii, that's always a point where you're like, oh, another place that you have to pay for parking. But maybe if we can look at where it's specifically where our Kama'aina are able to park there at a fair, no cost to very fair price, and those that are visiting might have a rate that is a fair amount where it equals out what the overhead is year to year, month to month, day to day, and so forth. I think that's worth looking into. Otherwise, I would be interested in seeing other ways of revenue that is a fair way to maintain this property.
Trustee Akaka, Laurie, look forward to those numbers in the future when you guys finally do your due diligence and you know, this raises great questions, and I'm just happy we talked about putting this on the agenda. Yeah, looking forward to progress. So mahalo, members. Mahalo,
Chair.
Stacy. Laurie.
Chair.
Oh, sorry, Kalamai. Trustee Galutera. One more
No,
question.
just one thing resonated with me, and that was the film industry. So may I suggest, if you haven't already, to contact the state film office and let them know that we got a piece of property up there that they can let their partners know is eligible for consideration. Because that would be an incredible stream of revenue. Okay, mahalo. Thank you, Chair.
Mahalo, Trustee Galutera. Mahalo, Laurie. Thank you, Stace.
Mahalo.
Right on. Appreciate the presentation. Trustee Akaka.
This takes me back to our previous discussions regarding Aho Appeal. Kai, has it been where you folks did site visits such as the legacy land properties or any of the holdings of OHA? Was that part of the program? Yeah.
If we did, it was like Yolanda Palace or those locations near the capital.
Right on. We're agendas for future meeting to discuss. Mahalo. Okay, right on, members. Moving on to new business. Informational briefing by Consequent Capital Management on the following investment topics for education. Number one, we're going to review the overall Native Hawaiian Trust Fund allocations and the investment policy statement approved that we, as members, approved in November 2024. And number two, the 2025 investment trends and opportunities based on the Native Hawaiian Trust Fund allocations. And today we have VJoy. Anyone signed up to testify? No testifiers. There is one.
Sorry, just a second.
Kalamai, hold on, VJoy.
We're going to bring up Eric Beach.
Aloha, Eric. Eric, if you're there, you can unmute your mic.
Aloha, can you guys hear me okay?
Yes, sir.
Mahalo. First of all, I'd just like to recognize the board for all their hard work for the community. I'm born and raised Waipio Valley taro farmer. So I have a special appreciation for you guys handling all of these crucial matters to the Native Hawaiians. I'm also a member of the Royal Order of Kamehameha. I'm a Mamo, and I represent their interests in some capacity. But speaking to the agenda item relating to education, as I'm sure this board is aware, a lot of our DOE funding and federal funding at the federal level is in jeopardy right now. I'm a full-time law student at the University of Hawaii. And it's scary for students right now, worrying about how they're gonna pay for their school.
Economai Eric. Well, sorry, what agenda item is this regarding?
The education
So
briefing.
you know what? That has to do with the matrix. So that unfortunately was a part of our meeting 9 o'clock a.m. this morning, and that was a beneficiary advocacy and empowerment agenda item.
Oh, Kalamai Chair. When I went on the OHA website for today's 2 p.m. meeting, it was on the agenda, so I had prepared for that, but excuse me.
It is not on our current agenda or the website, so maybe there's some kind of mix up. But I would encourage you to reach out, and we could have you reach out to Trustee Galataria or Vice Chair of the committee, Trustee Akaka, and we can get the information that you need
Hmm.
and testimony for future meetings.
Mr.
Yeah.
Chair,
Trustee,
he can also give his testimony at the community concerns, if you have.
Eric, my brother. So tomorrow we have community concerns on the BOT, the Board of Trustees meeting. And that meeting tomorrow will be taking place at 1 p.m. So I'll have to have you come back, brother, but we got to stick to the agenda items
No
and
problem.
sunshine law. And I appreciate your patience with us, man. Thank you.
I understand. Go ahead.
No, that is it.
Hey, Chair.
We'll
Go
get you.
I appreciate that. I'll attend tomorrow at 1 p.m.
Chair?
Trustee Galataria.
Yeah, Eric, we're so pleased that you came this far. So just know that we want to talk with you in the right and appropriate manner. So just, our committee is more than willing, outside of this forum, to talk story. So I don't mean to take up more of the committee's time here, but just know that you can call my office and we can schedule something, okay, Bill?
I appreciate that, Mr. Galataria, and I appreciate all of you taking the time to hear me this afternoon.
Okay, mahalo nui.
Eric, brother, thank you very much.
Mahalo.
Trustee
Eric,
Akaka.
I also wanted to share with you, so the option was given for tomorrow during the BOT of community concerns, and then also we're going to be ratifying the action item would, is it where it's for
Not
this
from
one,
today.
next one? Okay, well, anyway, our next BAE meeting is scheduled for Wednesday, March 5th, and that would be another opportunity for you to testify.
Thank you, Trustee. I appreciate the information.
Mahalo.
Eric, thanks for being here, buddy. Appreciate it, man.
Ahoy.
Hold on. If there's no one else signed up to testify on this agenda item, we will move on to Vjoy. Aloha, Vjoy.
Aloha, Chair. Aloha, Kako trustees, Pahana, staff, and other members of the community here. It's a pleasure for me to get to present for the first time now to the new ILM committee. As you know, we presented last year quite a bit to the RMC meeting, so I've been sort of sitting on the side, chomping at the bit for the opportunity to come up here and talk a little bit. But don't worry, that doesn't mean I'm going to talk too much, although I'll probably talk more than I should.
10 minutes, Vjoy. 10 minutes.
Exactly. So
No.
again, I'm Vjoy Chatterjee. I represent Consequent Capital Management. We are the independent consultant to the board on matters related to your investment program, specifically the Native Hawaiian Trust Fund. You have a consultants and focus on real estate as well, where we're happy to comment, but our focus is really on the securities portfolio. So as Chair mentioned, there's an agenda here on the next page of the presentation. We're going to talk a little bit about the Native Hawaiian Trust Fund allocations, review the investment policy statement that was approved last November, and then talk a little bit about sort of trends in 2025 as it relates to the portfolio. And then finally talk a little bit about education opportunities for the trustees. As I know, in terms of investment education, there's a lot of interest in doing that going forward. So if we turn the page to 3, you'll see a somewhat familiar table that's been modified a little bit. This is presented in your performance presentation material that you received from Northern Trust as your sort of compiler service provider for performance information that every quarter staff is presenting to you, and probably as frequently as you would want it presented, but at least quarterly. That table is at the top of page 3, and then the bottom of page 3 is the 2 donut charts are just a breakdown of that allocation. The left side is in terms of dollars. The right side is in terms of percentage. they're exactly the same, just one is dollars, one is percentage. So what I want to call your attention to as trustees, as you're aware, there are these major asset classes: public equity, private equity, global real estate, hedge funds, fixed income, enhanced liquidity, cash. Those are the major components of your portfolio. So the building blocks of your portfolio. If you're building a house, that might be the bricks or the infrastructure that goes in the pipes. And that's the part that really kind of drives returns. And we'll talk a little more about that in a second. And that's sort of where, as trustees, as fiduciaries, a lot of your decision making and input in terms of how much that you want to invest in a particular asset class, how much what types of investment, what types of risks you're willing to take, happens kind of at that level. The next column, labeled risk strategy, is just the way that OHA, you kind of break down what those asset classes translate into in terms of what you're trying to achieve by holding that. So the first three, the equity-like component of your portfolio, you're interested in capital appreciation. You're trying to grow your portfolio, and a lot of that growth comes from economic activity. So the better the economy is going, the better those stocks type investments are going, the better the Native Hawaiian Trust Fund portfolio is going. In the middle there, you have something called hedge funds, which is a diversifying asset class, as you discussed it. So that implies that by holding these hedge funds, the returns aren't exactly driven by the same factors that drive equity returns, or less so. And so they kind of diversify some of the risk so that maybe when equities sell off, they don't sell off as much because the hedge funds are using maybe a hedge strategy. That's the idea with the diversifying exposure that you have. And then you have capital preservation, which tend to be your more liquid fixed income, liquidity type exposure there. And so those are the major kind of risks that you've identified and you're willing to take in your portfolio. The next two columns look at what the actual weight of the portfolio is as of the end of December, so the end of 2024, versus the target weights, and that's the next column over. And the target weight is, as a organization, you have decided this is what you want your portfolio to look like. Now, those are specific pinpoint sort of targets. So you can see public equities, it says 42%. There's actually in the policy a range around that, because we know that it's very rare that you're going to be exactly 42% of your portfolio in equities, because the price of equities move constantly, right? So there's actually a range, and so it's okay if you're a little bit off here or there. You're a little more off than you should be, and we'll talk about that in a second. The next column there, it's kind of in blue because sort of on spreadsheets that I work with, I use that as a color where the input is. So these values are going to change day to day, month to month, quarter to quarter. So it's kind of that's the value, and that's driving those percentages. That's driving the shape of the donut. On the right side, you have a difference. You're taking the difference between your actual weight on the left side and your target weight, and that's where you come up with that number. And then the last column on the very far right is just that percentage shown in dollar term. And those are millions of dollars, right? Because your portfolio is about 600 million. So just add another 3 zeros onto each of those numbers to know where you are. Now, the reason why I put sort of some of these last two columns in red and some of them in yellow, it's a little bit arbitrary. Usually when you're underweight, you kind of think like, oh, I want to get back up to speed. And so I just made it a little bit red. The yellow, you're a little overweight. And actually in these markets, you've been overweight to equities, which really hasn't hurt you. It's actually helped your performance. And so I didn't want to make it also red. But when you're not on target, then you're potentially taking more risk in areas that you agreed to previously that you didn't want to be exposed to, or you're taking risks that you're not even aware of. And so that's why you build a portfolio according to a long-term strategy of saying, okay, we're going to allocate to these asset classes, which translate into these kinds of risks that we want to take. And then here's what we have, and here's the weights. And so when you have differences, your portfolio is going to be driven differently than what you had originally set it out to be. So in this case, if you look at it, Most of the differences are kind of reasonable. You know, they're a couple percent or less than a percent off of what your target is. And again, you're rarely going to be right on target. You're always going to be in a range around that. So that's okay. But the first two lines there, the public equity and the private equity, that's something we looked at last year and we talked about it, right? So you're overexposed to your public equity. So those are your growth stocks, which was great to actually be overexposed to because that's where your Magnificent Seven is. Remember big tech, and they really drove a lot of portfolios last year. But that also means you may be overexposed to international. Traditionally, OHA has not done particularly well with your managers that are looking at international equity. You do much better with domestic equity than you do international. So there are trade-offs, and it's not like, oh, that means you're doing something wrong, you're doing something right. It's just a way to say, okay, let's understand what is happening and why it's happening, and then ask the questions. Remember, it's always asking in context. Is that what you want to be doing? Should we be changing the allocations? Does that make sense or not? In this case, talking with staff and working with staff, we know that, you know, we want to get back to these target allocations. And that's really important in the second line, which is the private equity exposure. And you can see almost exactly offsetting the overexposure to public equities is the underexposure to private equities. And that's why Ryan is working very hard for the last several months using the discretion in a box that you approved at the end of last year to identify good managers to have in the private equity portfolio as you build that out. You've always had, as it's shown here, exposure to these private managers, but it's over time, for whatever reason, it's become underallocated and underweighted in the portfolio, which again, actually in the last few years, that hasn't been a bad thing in the sense that they have underperformed markets in general, private markets. But it also implies that you're taking risk and have exposure that over the long term you had agreed to previously that you don't want to be. So what Ryan is doing is trying to get back to your target allocation, which is this 19% number in the middle of that chart there. And so that's why he will come back at some point and talk about what he's been doing with that discretion of the box, what he and Pohana have been doing, and then report that back to you. And then you have the ability to then adjust that box, tell them that, you know, that's great, we like these managers, or what about other strategies? That's where you exercise your oversight and your fiduciary responsibility on the program, right? And then you send him on his way to kind of do that. Now, the way the liquid markets, which again, we also have to make some adjustments, that process isn't fully defined yet. That's a conversation that's sort of ongoing. And as your independent consultant, we're working closely with staff to sort of figure out what's the best design and how to go about making those adjustments. That might not involve discretion in a box. That might involve more involvement by trustees. It might involve kind of just letting the staff execute as the policy kind of describes and then reporting back. But maybe it's reporting back in a different way, or maybe it's bringing those managers in front of you before a commitment is made. Again, that's kind of an ongoing discussion. That's something that's a process that we want to define and then be able to execute on in 2025. You did that very nicely for the private markets. This is a live conversation and discussion that we want to have in 2025 because you're restructuring your portfolio. Not only in terms of these over and underweights, but you remember the policy, and we'll talk about this in a little bit, you moved away from your manager approach, and you're going to do more direct investing and own relationships. Actually, I think part of the reason why you have this misallocation in the portfolio now is because a lot of that authority and discretion was given to these managers of managers. And they, not that they were doing a bad job, but they didn't always understand what it is OHA's trying to do overall. They didn't have that kind of guidance. And so that's why we've recommended the changes, and staff did a great job working on the new investment policy statement, and then you approved it last year. So that's kind of where we are. And then the breakdown of the donuts are just sort of just showing it in a different way to make it accessible. So let me pause there and answer any questions related to the portfolio structure as it stands today.
Mahalo, Vijay. Trustee Aquino.
Thank you, Vijay. Good to see you back.
Nice to see you, Trustee.
Vijay, I was just curious. You mentioned that the actual weight and target weights are not that different for capital, for public equity and private equity. They're about 9.7 and 8.77. That would be the percentages. But when you actually look at the dollar amounts, public equity is 300 million and private equity is only 60 million. And that would imply a much greater variance in terms of the weighting. And I'm just wondering if there's anything to that, if there's a bias or prejudice toward one form of equity, public or private.
So, so the target weighting is that you want to have roughly 19 or close to 20% in your private markets and maybe 40% in your public equities. And then you got that other component of global real assets, which in other portfolios can be designed as an inflation offset. In this case, it actually is risk bearing, meaning it's looking for return and capital appreciation. What you have in terms of the difference here is because you haven't been making commitments over time to
Right.
get to your target, right? So that's why about 60 million or 10% of the current Native Hawaiian Trust Fund portfolio is in private markets. And so if I understand the question is, it's not the difference, and the decision in the difference there is the target weighting when you set that up. The way it's been executed has resulted in an overweight and underweight, and that's something that we want to address. And that'll be addressed because you've given discretion to staff to then go out and execute to get to those targets. And then as you as trustees and fiduciaries have every oversight to go back and ask the staff to say, well, how are you executing? How are we getting to this? And we've been working with staff, and as you may recall, it's going to be a multi-year effort to get just to this 19%. The 19% may change, like next year or something. You might do an asset allocation study and say, well, maybe we want to be 25% in private markets, or maybe you want to be 15% in target. And then you would be that would be a change in your risk profile. That would be a change in your return expectations. And then you ask staff to go and execute on that policy. And that's sort of, but right now they're just trying to get to the 19%,
Right.
which is the previous decision that you had made. So they're not trying to change the risk parameters of the portfolio. They're not trying to add additional risk. They're just trying to get back to where you were comfortable previously.
Right. That
As
makes
a board.
sense.
Yeah.
I was just pointing out that getting to 19% there in the private equity as opposed to getting to 42% in public equity is a hefty difference.
It's a hefty difference, and the way these markets
And
work are
hefty in
different.
terms of dollar amounts in particular.
Dollar amounts, yeah, that's right. And that means that there's a discipline, there's a pacing that you have to do in the private markets,
Right.
because private market managers, the way you're investing for the most part are into like partnerships, general partnerships, they call it GP, you're the LP, and they're not always open the best opportunities. And so that's why we set an amount that maybe, you want a range that you want to be committing to every year, and then make that commitment disciplined over time. Without concern for where the market is necessarily going in the short term, what's happening in Washington, what's happening at the Fed, but just make that commitment year in, year out. And hopefully in about 4 years or so, you'll get to that 19%, if you don't change anything else. Liquid markets, the public equities, you can go up and above and get back to the 42% pretty quickly. And we're actually having conversations with staff
Okay.
about how to do that to keep exposure, but not necessarily changing out managers right away. There's different ways that you can go about it.
Okay, very good. Thank you.
Okay. I'm happy to come and talk to you separately too, if that's helpful. Okay, then let me.
I
yeah,
think we
go
have one
ahead.
more question,
Sorry. Yeah,
Vijoy. Trustee Alapa. You sit on your microphone, trustee? No. Thank you.
So obviously we're underperforming. I know we're in a bull market. And I know your staff is working on changing that. What my concern is, why are we not increasing a little more of a higher risk in the private equity? Because as you may know, higher returns are going to happen because of that. What is your opinion on that?
Sorry.
Oh,
Vijoy,
sure.
I believe we just did. What meeting was that? 2 meeting agendas ago? Yeah, sorry, Ryan, can you I'm gonna, Vijoy, if you don't mind, I'm gonna have Ryan. Yeah, I'm gonna have Ryan Lee answer this question. Trustee Alapa, if you. This is an item that we voted on, so I just wanna make sure everyone knows that 2 agenda items ago we did talk about it. So Ryan, if you could remind us.
All right, here we go again. I was wondering about the private equity and why we're not increasing the risk there? Because as you may know, we get a higher return. What is our status on that?
Right. I believe we want to get back to the 19%
Yes.
target, right, before we evaluate the increase to private markets higher, right? So we want to take it in phases. We want to build up the portfolio, get to the target, then reevaluate, and then potentially increase the target to increase the risk taking.
Who determines the target?
Right now, it has been determined by the trustees, right? So the existing targets has been in place, I would say, over the last 5+ years. So the original asset allocation that was put together, it was designed to achieve a certain return hurdle, right? We talked about achieving that inflation plus 5% over the long term. To get to inflation plus 5%, you need to take a lot of equity risk, right? So private equity is a component of that to get to your return target.
So looking at the chart, and I'm going to look at the pink side, and that's we're all in the negative. So that's obviously we're underperforming, correct?
Over the long term, we have underperformed because we were underweight to the private markets. So I think 2 weeks ago, we talked about the 10-year performance, where the performance has lagged policy benchmarks as well as the overall CPI plus 5. And part of the underperformance, as I mentioned, was not just because of the private market allocation, but also the asset allocation, the risk taking, right? So again, we evaluate it at least once a year in terms of that allocation. And in terms of the plan that we put together is to execute, get back to the existing target first, and then reevaluate the actual asset allocation by doing an asset allocation study with the trustees.
Mahalo, Ryan. Thank you so much. Mahalo, Trustee Alapa, for your question. Vijoy.
Really quickly,
Kapuana.
I just wanted to see if Ryan could give a more specific example for Trustee Alapa. So in the immediate, what is that reinvesting of private equity? What is the immediate step that you've taken to bring up that get us to the 19% target?
So the trustees approve a commitment plan, and that's part of the strategy to get back to that target, right? So in terms of making those commitments on an annual basis, on a pacing schedule to get from the 10 that we're currently at to 19 is about a 3-year path. The reason being that you want to commit all of it in 1 year is because you want to have vintage year diversification across strategies as well as years, right? So not putting all your investments in one specific year matters a lot for a program.
Can you give an example of a private equity company?
Well, an example would be anything that is not publicly traded, where you can go in and buy a stock online. So a company like SpaceX, for example, is a privately traded company. There are a lot of examples. There are probably more private companies out there than public companies that are listed. So opportunities are greater within the private markets to actually add value over the long term compared to public markets.
So we're going to focus our energies in that direction, correct?
Yes, but you can't put all your allocation to private markets just because of the liquidity, right? So if you allocate to private markets, you're committing for 10-year period. And you need to manage the liquidity of the portfolio to meet obligations of the operations, as well as rebalancing risk across the portfolio.
So there was a graphic that you had, when you had done your presentation to trustees, there was a graphic that showed the different private equity companies, and then somewhere like towards the top, and there were like, it was a bigger private equity company, and then there were some towards the bottom right quadrant. And those were like different types of private equity companies that you were looking at partnering with. Do you remember that?
I think that you're referring to the secondary market opportunity,
Yeah,
where we're looking at, smaller managers that are looking after smaller deals, but where they have the ability to generate high returns. But also we do want to look at the larger secondary managers because there is an opportunity within the markets for both strategies, right? So we do want a larger manager as well as a smaller manager to go after the opportunity set within private markets, especially within the secondary market landscape.
and I know that there's time in between these presentations, so if you'd like, Chair, we can, sit down again and based off of what was voted on by the board, that schedule of investments, we can go over that again, because that's what Ryan is following, is what the board has approved in terms of that schedule of investments or reinvesting for the private equity.
Great. Okay. Trustee Alapo.
Okay, so in other words, I'd like to meet up because I would like to have as much information before we go up to our common fund and have a good idea of where we stand overall, especially because I'm very much attracted to the private equity only because I know about the high returns there and how much effort we're actually putting into that. And as I've just heard you explain that, so I understand, I get that. But thanks anyway.
Thank you.
Malo Trustee Alapo. Kalamai Trustee Ahuna. Aloha.
Thank you. No, I just had a few comments. I really like the Trustee Alapa's questions. But my question was, in all these agreements, even though I was skeptical about it, I remember we saying 20% for private equity. So that is that where we're at, or we're going to get to 20%?
The current target is 19%, right? So we're currently at 10%.
Oh, okay. No, but I thought our goal was 20% private equity when we were talking about it. Is that but it ended up at 19? Is that what it was? I mean, I'm not sure. I just remember hearing 20.
Vijoy mentioned 20 just to kind of round it to.
Okay. No, that's cool. Because Trustee Alapa's question was, how did we get to these numbers and stuff like that? I mean, I remember we talking about it, but I thought it was 20. That's all it was. So thank you for clarifying that.
Sure.
Mahalo Trustee Ahuna. Mahalo Ryan. Appreciate it. Vijoy, you back on, bro. Now you got 1 minute. Nah.
Okay,
Appreciate your
we can
patience.
move on.
Thank you.
I do want to note, though, that it's not a guarantee that private markets perform better than public markets and straight. There's a lot that goes into it. And as Ryan indicated about liquidity and there are other issues, that's why you don't have all your eggs in one basket, as he indicated. So just to be clear that there are actually portfolios by institutional investors that don't have hardly any, if any, alternatives in it, and they do pretty well. They're tough to beat as well, just like a 60-40 portfolio. But those nuances we can discuss offline. If we turn to the next page, the Native Hawaiian Trust Fund investment policy statement that was approved in November. What you have here is an outline or the table of contents actually from the document, and staff was very instrumental in helping to revise this. Some of the big moves here was really the move away from the manager of managers and into a document that gives that more explicitly gives oversight and fiduciary responsibility roles to the trustees, and also is more in line with kind of best practices, what you see a lot of institutional investors like yourselves having as far as an investment policy statement. So just to highlight the bullet points below there. So in this document, which I encourage you all to read or to have your staff read, but there are some key things to take away from it. And in terms of objectives, roles and responsibilities and beliefs, we discussed and we articulated beliefs in why you invest capital markets. Those belief statements are kind of a short way for you to be able to explain why you hold the portfolio you do. And that's something that you should be able to recite for yourself, but also as you get asked in the community to understand where and why you're exposed to different types of risks. Another important section is kind of the philosophy. So the high level ideas there in terms of your investment philosophy is you're a long-term investor, you want a diversified portfolio, and at least some component of it is active. And that's where you want to generate your excess return is kind of in your active management, whether that's private or public or some other type of asset class. There's also a component in terms of Hawaii direct investments, and that's covered in the investment policy statement. So that is part of what you're trying to accomplish as an organization. In terms of oversight, again, mentioned the board being a fiduciary. That means you're making prudent person decisions. So that's a standard where a person acting prudently would be reasonable in making a decision in terms of how to invest. It's also explicit and fine to rely on prudent experts. So if you bring in your staff, you bring in consultants, you bring in your fund managers to oversee those assets, and they're held to a higher standard, which is someone who has experience and understanding of these markets as professionals. They should be able to assist the board in managing the portfolio in that way. And then there's a code of ethics, which is also an important component of your investment policy statement. Another section covers the roles. So the board as the fiduciary, your staff, your consultants as implementation of your investments. And by consultants here, I'm talking about like investment consultants or real estate consultants that are specifically there to help you execute your policies that again are decided and held at the board level. You have managers, and they perform their task in terms of the strategy mandates that you assign to them or that you look for them to execute. And again, that flows back up through your staff and over to you as the board. And finally, you have like, for example, your custodian, your other service providers, and they help you with like your performance report, custody, operations type activities. That would be everybody else who's providing a service in terms of how you manage your portfolio. The asset allocation guidelines are spelled out in your investment policy statement. That's where the targets are articulated. And you know, while you get reports that show the changes and sort of the actual holdings, the targets are set and the ranges in your investment policy statement. There's also policy there about rebalancing, when, how you kind of rebalance, the types of assets that you invest in, and then again, your Hawaii direct investing. Finally, there's a couple of sections. There's a section on manager selection. So how do you go about selecting managers? We talked about in the private side having the discretion in a box. Also, how you're monitoring your portfolio and your managers, and then what's the process if you decide to terminate or put onto a watch list for managers that aren't meeting your expectations. So again, there's a lot of process driven, and that's something that the trustees control through their investment policy document. And then finally, there's risk management oversight. Risk management actually should be throughout your investment process, but there's a section there that delineates it and explicitly talks about the need to manage risk in the way you manage your portfolio. Moving on to page 5, in terms of these are sort of trends and opportunities based on the Native Hawaiian Trust Fund. So the way I've broken this up, the first 3 big bullet points here, capital appreciation, diversifying, and capital preservation, are in line with those big risk areas that you as a board are kind of identifying as how you want, what kinds of investments you want to put in your portfolio. So for example, in terms of capital appreciation, now remember, capital appreciation is going to be the infrastructure, but it's really the private equity and the public equity type of investments you're making. So that's where the bulk of those sorts of returns, not all of it, but the bulk of it are driven by this idea of capital appreciation, right? Economic growth, greater productivity. So the things that can affect that part of the portfolio in 2025 are what's going on with U.S. trade policy and what's the impact on that on the growth prospects for the economy. So that's where tariffs come in, right? That's where your concern is. Oh, if we have tariffs, is that going to help or hurt the growth prospects of the U.S. economy? Because the U.S. economy is driving the bulk of my Native Hawaiian Trust Fund returns. So that's where your concern is. There's also concentration risk. So if we talk about, oh, the Magnificent Seven, big tech, that is done really well in the markets. Someone told me the other day, it's a third of the S&P 500 now are those big 7 companies. So they've done extremely well, but that concentration brings along certain kind of risk. Are they continue to outperform? Are they continue to grow? Or maybe they'll give back some of that. Maybe other companies will start to do well. So how does your portfolio, particularly your equity managers in this case, how are they taking advantage of this or avoiding these sorts of risks, and then reflected in the Native Hawaiian Trust Fund? The China shock, or awe, I put awe as a cute way, but China shock is this idea, I don't know if it's beyond the academic papers, but there may be a book or two, but you know, that we're waking up and suddenly China controls a lot of the industrial production in the world. They have long logistic production lines. And is it going to be possible for the US to kind of bring back industry to compete in that? So that's something that when you think about, okay, well, what exposure do we have to China? Well, some investors say we don't want exposure to China because we don't think that that policy or that's going to be helpful going forward. We think Washington might be against that. But there's a lot of growth and opportunity happening in China. So how do you avoid that in your portfolio, or are there other ways to play? It used to be back in the 2000s when we wanted to invest in China, we would invest in like Australia, which was benefiting by the growth of China at that time. That's how we could get exposure. I'm going to move along, or you want me to?
I see a hand up. I'm going to acknowledge Trustee Galutaria before we move on, Vijay.
Sure.
Trustee Galutaria.
Yeah, thank you, Chair. I've been wondering where I should jump in here, because you know, we've been talking about 30,000 feet, in some cases maybe even 50,000 feet. But I want to, once you hit China shock and awe, and once you hit these other areas, I want to move this particular portion of my inquiry down to ground level, because I'm not sure where this lies, but it is an emerging industry that I want to make sure OHA is involved with in one shape or form. I don't know whether it falls in asset class, public-private equity, global. Where is AI? Where is AI? And are we participating in AI? It's a train that's moving out of the station. I hope we do not miss the train, no matter where it is and how it's done. And where in these opportunities based on allocations does it fall? And are we clearly engaged in that arena?
So thank you, Trustee Galataria. That's a great question, and that's a great way to kind of illustrate how, as a board, you can kind of have a conversation about your portfolio. So here's something that's going on in the world, right? You've got big data, you've got technology happening, and you have something called artificial intelligence that's changing the way we think people work, the opportunity sets going forward. So as has been kind of discussed a little bit, that Magnificent Seven, the big tech companies, are pushing forward on their AI. So with the big tech, there's an opportunity. So that's mostly going to be in your large cap growth stock managers, right? What's your exposure to Google? What's your exposure to Meta? You know, that's where you're getting returns related to AI development. On the other hand, there are companies that are newer and maybe they're not even publicly held. So they're in the private sector, which you're trying to also build up. So that might be in the venture capital space. So who are our venture capital managers? And are there managers that are exposed to technology and specifically maybe kind of the development of AI type strategies? So that's another area where it could be in the portfolio. Now that's all in the capital appreciation part of the portfolio. But you might also find something related to AI in the way, you know, the government is spending its dollars to develop technology. Is it doing basic research? Where is that coming in? How is that then translating and being commercialized? And that could be happening at university level. So does that have an impact on the government's borrowing? And so again, does that have some impact? Maybe it's lesser and less important to the overall performance of the portfolio, but that's how you kind of say, okay, where is AI involved in other parts of the portfolio? If you look at the last section of this page, I talk about black and gray swans. So this black swan idea comes from a book that was written by a practitioner and academic, but also a very talented trader, who kind of point out this old story that in the you know, the age of discovery, or sometime 500 years ago, let's say, Europeans had never really been out of Europe. They'd only known white swans. So they thought there can only be white swans. Then they find themselves in Australia and they suddenly come across a black swan. So that sort of blows their whole idea of like there can only be white swans. So in the financial world, what that means is like we think the world works a certain way, and so it can only work that way. And then something happens that we couldn't conceive that changes the opportunity set, that changes the prospects of returns that we just didn't see coming. So people will point to things like the great financial crisis, like the pandemic, as examples of either full black swans or gray swans are kind of like, we should have seen it coming, but so we call it a gray swan. And in this case, Trustee Galataria, the last point there is this idea of what is deep seek and what does that mean for growth models. So for those of you who may not been following along with the AI story, but a lot of big tech, a lot of venture capital companies are saying we need to raise hundreds of billions, trillions of dollars in order to develop AI and for the United States and for our capital markets to be on top in terms of, this technology innovation. Now, a couple of weeks ago, maybe a month ago, there's this Chinese company that came out and said, we've developed the same AI that you get at ChatGPT or with, Notebook LM and what have you, and we spent $6 million to do it. Now, DeepSeek, they get the big whale as a kind of a symbol. Now, there's a lot that's come out since then. Did they really only spend $6 million? What other effort did they have? As that work? But the technology, if you actually look and see how it's uses, is actually phenomenal. Now, how does that play into the Native Hawaiian Trust Fund portfolio? Well, if I'm buying a lot of Magnificent Seven stocks, or I'm investing in the venture funds who are saying we're going to go after AI and we need so much money, but then I was like, wait a second, now you only need $6 million to do that? It turns that world upside down. That's why I have it in the black swan sort of section, gray swan. We don't know exactly how that's going to play out, but you should know that if the thesis of what it's going to take to have AI and technology superiority going forward is not raise $1 trillion and go invest it, but it's raise 100 million. That changes the way you build your portfolio. That changes the opportunity set. Now, there's a lot of other things going on, right? There's a geopolitical component to this. There's all kinds of things beyond just the investment portfolio. But bringing it back to the Native Hawaiian Trust Fund is that, does DeepSeek mean, hey, maybe we don't need to invest as much in venture capital to get the return. Maybe we have some exposure, but we should spend that risk capital elsewhere. We should be looking for opportunities to grow elsewhere. So that's a multi kind of pronged answer to your question, Trustee, but you can kind of start where you did.
No, I get it. Listen, I just
through the portfolio.
This is the bright and shiny object in the room. I mean, you cannot deny that it's on the table. So I just wanted to ensure that it's in play in some way, shape, or form. You guys figure out how you want to bring it to us to consider, but it is definitely a part of the next chapter. Thank you.
And just rest assured, Trustee, and everyone, that you do have exposure to AI in your portfolio. And some of the performance is being driven, in fact, by companies who are on the forefront in building this new technology, in building this new world, if you will, I guess.
Mahalo.
Mahalo, BJ, before you proceed. Trustee Akaka.
Hello. When Trustee Galutieri had asked that question regarding AI and what category might this fall under, I share that sentiment that Vjoy has, because every point here made, the sub point, there's at least one that matches artificial intelligence. And going back to when Trustee Alapa had mentioned Common Fund, I had mentioned this in previous meetings too, but that was the theme of the conference last year. And it looks to be in a theme that continues in some form or matter in this next one. So it tells me that Common Fund, this is a main focus of theirs. And if we're going to continue our relationship with Common Fund and our commitments with Common Fund, that definitely will be implemented. And again, one of the biggest lessons I learned in interacting with the artificial intelligence, the super genius robot, Sophia there, is that we as Hawaiian people, we, the keepers of our knowledge, our language, our history, our culture, when we look at these big AI tech companies, the future of where we are looking to possibly or continue to invest in, that goes hand in hand with making sure that we have the correct information out there that these companies are putting out there and sourcing through AI. This goes hand in hand. There's a responsibility with this artificial intelligence. We need to be able to provide that as well as profit from that. But there is a kuleana to our people and to our world to provide correct information with all these companies that are going to be sharing in some form or matter through artificial
Thank you,
intelligence.
I think that's an excellent point and observation, and you should actually ask that of your managers. Now, some managers, I don't know if Common Fund will have that same concern about how Hawaiian culture is being executed in this AI world and strategy. But within your investment policy statement, you talk about Hawaii direct investing. So it's not beyond you to kind of say, are there opportunities in Hawaii or with companies that maybe are willing to come and work with you here in Hawaii to say, hey, what are you doing in terms of developing AI to make sure that the Hawaiian culture is being included in that development? And that might be a venture investment. That might be a Hawaii direct investment. It's a great conversation to have. It's within, I think, the Native Hawaiian Trust Fund purview and what we do for you in terms of advising, but it's also a little bit more focused, and it's maybe part of your bigger mission in terms of perpetuating the culture, right? Which is terrific and important for you to do, and is relevant to the Native Hawaiian Trust Fund. But it won't be a big driver of it, but it'll be a component that's important because it's important to your bigger mission, right? Which is probably could play a bigger role in your larger mission, is to make sure that whatever the future is in terms of society and how we work, that you perpetuate the culture.
I think, you know, in having these different different entities that we invest with, that we have these relationships with, these commitments with, using that data to see what entities they're investing in that are successful, those are the ones that we pay attention to and that we need to focus in making sure the correct data we have in terms of our history, culture, language, all that education that needs to be out there, that the correct information is out there. And that's a driver of thought there and how we can go forward. Mahalo.
Mahalo, Trustee Akaka, and I'm going to take one more question from Trustee Lapa, and then I'm going to wrap up the AI conversation so that Vijay can carry on with his presentation. So, Trustee Lapa.
Thank you. It's definitely on that subject of AI. Exactly. In regards to when you mentioned about DeepSeek and the competition, which I believe is NVIDIA, where is OHA in that picture?
So OHA has exposure to NVIDIA, which is a publicly traded company, right? So that would be in your large cap growth managers. That would be kind of in your technology. It would be actually any company that's using kind of the GUI computer chips that are produced by NVIDIA as well. So that would be kind of the direct way. Now, DeepSeek isn't necessarily a publicly traded company. It's not. And it's also a Chinese company. So getting exposure to it, I know you can get it, you know, onto your device. I think if they haven't locked it down, although there's some state agencies or some federal agencies that are saying you can't download DeepSeek because they're worried about how that technology is being used. So I don't know. There are probably companies that are actually using it in their day-to-day. Maybe they're becoming their AI in general, not just DeepSeek. They're using it so their employees are more productive, right? So there are different ways. Again, there are different levels that it's being used, and then how does it translate? The way that it's going to be translated is all these ideas ultimately has to translate into a stock price, let's say, and what that stock, if it makes the stock price go up, that's going to be positive for your portfolio. If it makes it go down, but that's kind of how you get to the level where you guys eat, right? It's like the returns, or where we're, at least for the Native Hawaiian Trust Fund, that's where we eat, right? It's like, what's the return?
Mahalo, Vijay. You can continue on with your presentation. Trustee Aquino, does it have to do with AI? Stocks, can we let them proceed, and then we can come back to your question, Trustee, just so Vijay can, thank you very much. Appreciate it.
Okay. Thank you, trustees. The other bullet points there happen to do with your other parts of the portfolio, like the capital preservation and other examples of black swan, gray swans, and I'm happy to talk about that. But I think the idea is conveyed in the conversation we just had about AI. So if I could move on to page 6, which is the education slide. And what we were asked there is to look at the managers in your portfolio and show what other education opportunities are there. So you obviously have Common Fund, where a lot of trustees have attended in the past, and I think will continue to participate this year. But also some of your other major asset managers include Goldman Sachs, JP Morgan, and PIMCO, and they have different events, as you can see. And I think staff attended one of the PIMCO sessions last year. I don't know if the trustees had attended any of the others. They may not have been aware of it, or you may not have been invited to it. But in fact, you should be invited to it, and you should feel that you're able to attend these events because these are major service providers for you, and they do want you as institutional investors to participate. So this is just a short, small example, but there are other events and conferences where you can get some great education and opportunities to meet peers and build networks that aren't necessarily the managers in your portfolio. And as we've discussed in terms of the investment policy statement and the restructuring of the portfolio, while these managers may in fact still be very active in your portfolio going forward, they may not be active in the way that you had them before, and there may be other managers that come in and take over certain mandates. So this is just an example, and we're happy to go into that and find those opportunities. But again, just to be clear, there are other opportunities for you to learn. And of course, Consequent is happy to provide education services as we do, whether in this public forum or like say in a seminar or individually. That's our role as your independent board consultant, is to really be there as a resource to help you to understand not just the markets, but the specifics in the portfolio, and to also to collaborate on your behalf with staff as they execute your policy.
Right. And when we asked VJoy to put together a list, I think you came back with about 30 different options, and I asked you to narrow it down. But it is our fiduciary obligation, right, to make sure we have the training. And just to make note also that these sessions are also training sessions as well, and the regular updates from Ryan Lee as well as VJoy. So just keep that in mind. I'm going to go to Trustee Aquino real fast, VJoy. Question to do with stocks, right, Trustee?
Thank you very much. Earlier, you talked about and alluded to different roles that the board plays and the revisions that we've made here in our paperwork. One of those roles would be determining asset allocations. Another role you referred to when one of us talked about AI, and you affirmed that that's a good discussion for us to have here on the board. But where do we draw the line between talking about something as a concept and talking about specific stocks? I've got a couple of concerns about us as board members discussing specific stocks such as NVIDIA and so forth. One concern is an ethics issue, and you've made reference to an ethics guideline we have over here. All of our personal financial statements need to be, information needs to be reported to the Ethics Commission, including our investment in stocks. So I'm not sure how appropriate it is for us to be engaged in that kind of discussion. The other concern I have is just managerial, whether we as lay people in the financial sense should be talking about stocks and referring that information to our professionals. Could you give us some guidance on this?
Sure. So, and maybe Pahana and others will have sort of something to add. But in terms of your role as overseers of the Native Hawaiian Trust Fund, you are the ultimate fiduciary and responsible for that, and that can never be delegated to anyone else. However, beyond that, along with that, you have broad policy structuring. You have, you can say that there are certain assets or things that you don't want to invest in. You can say that there are asset classes and risks that you want exposure to. Now, just saying it in a meeting isn't enough to enforce it. It needs to ultimately end up in something like the investment policy statement, because then it's clear, these are the rules, this is what we'll invest in, this is what we won't invest in. And that could include specific stocks. You can say, we're not going to invest in Bitcoin. Like that could, but it can't just be, oh, I made a lot of money in my 401k in Bitcoin, you didn't, or maybe we should do that here. Well, let's do a study, let's educate ourselves, and then ultimately, does that become an asset class? Is it something that you invest in, a manager that invests in something like that? But it's okay to have conversations about opportunities, because the next best idea, you never know where it's going to come from. It's just as you implement, you need to implement in a process-driven, policy, strategic manner, that has a long-term view of the opportunity set. And then after you've set those parameters, the policy, the do's and don'ts in your document, then it's up to your staff, your consultants, and your fund managers to go and execute that policy. So if you say, we don't want to invest in any tobacco or alcohol companies, well, then you put that in your policy and you say, those are stocks we don't want to invest in. Okay, well, how do we know which ones have too much tobacco or alcohol in it? Because maybe they just have 5% of their revenue there. Well, you come up with a plan. So one way you might come up with a plan, you say, well, there's a third party watchdog out there, and they go through and they say, these companies invest in, so-called sin stocks. Okay, well, let's subscribe to that. And when they say this company is doing too much in those prohibited activities, then you'll get a letter. And then you say, okay, staff is executing, they'll get the letter and they'll say, oh, this company now is on this list that you approved in your policy that we're not going to invest in. So now a company comes up. So now staff would be like, okay, let's go through the portfolio. Let's look at our managers. Do they own this stock? And now they'll engage with the manager. Hey, we can't invest in this company anymore. I see it's in your portfolio. Is there a prudent and optimal way for us to get rid of that exposure? Is it selling the stock? Is it hedging the stock? There are all kinds of ways that they execute. And that's the level that you want your staff and your consultants to be acting on. But it's on policy that's driven by you that may or may not be because of a discussion about a specific kind of stock or a specific name. You don't want to necessarily be saying, oh, I'm not going to invest in this name unless it's in a list or some broader policy. But it's fine to have those conversations. It's just that the way you implement an action on your ideas here as a group in the portfolio is through policy process that's defined, that's transparent, where it's accountable, and then you expect your service providers, your staff to then execute your policy, and then you hold those groups accountable that they executed the policy. Or if it's impossible, they come back and say, hey, we can't do this. Then you say, okay, should we change our policy, or should we do, then you have another kind of discussion. Does that answer your question?
Well, to some extent, yes. I like the fact that you're separating policy from execution. And policy is the realm of the board. That's where we talk about things like, we think we should be on the crest of the AI movement. But execution is when you talk about specific stocks that are managed in the portfolio. And that should be done at the administrative level. I hope we have the appropriate firewall between the two for two reasons. One, managerial, and number two, ethics, because we also want to protect ourselves from any ethics charges in terms of in any way trying to influence or benefit from any workings of individual stocks.
Right. And so if you go back to page 3 of the presentation, which is the breakdown and the allocation of the portfolio structure, we didn't even go into the individual managers that you have, and let alone the individual stocks. Because again, your focus is at that policy level, that risk level, and then the execution. Now you can always ask and say, hey, who are the managers that have AI in the portfolio? Okay, Ryan, come back, and in part of your next quarter presentation, these are the stocks that are held by JP Morgan, that are held by Goldman Sachs, just as a way to understand it. But it wouldn't convey into like, hey, let's go tell Goldman Sachs to buy more AI companies. That's a decision that they need to make, and that your staff is monitoring, right, to make sure that that's within the mandate we've given to them, right? They're not then suddenly investing. So that's kind of, it's a little bit dynamic, but I think there are some clear lines, and your investment policy statement makes that clear, from before, and it takes that ownership as a group back to the board, as opposed to where before. And part of this asset allocation differences, I think, is driven by that previous structure, where a lot of these decisions were being made at the manager level without a lot of oversight from your staff, without policy driven by your board.
Right.
And that's changing going forward.
It's definitely changing. And Ryan, thank you for executing what the board decided to create as policy, and you're doing a great job. And I think the questions are going to be in the future when Ryan starts to give his update. Maybe, hey, how do we get here? What's this company about? I think that's what Trustee Aquino is trying to get at. Ethically, what if we separate the board and administrative staff and the ones who execute, I think we cover ourselves at that point. And then just so we are aware of the questions that we need to ask in the future, I like that you touched on if we have a problem with the way we're investing or the outcomes, it's a policy review at that point. And that comes back to the board, and that's when hey, I want to get here, I want to get there. Okay, well, let's talk about the policy verbiage, right, at that point. I'm going to acknowledge Kapo Hana at this time, and then I'm going to go to Trustee Akaka.
Mahalo. I just wanted to also add on to what Trustee Aquino was talking about in terms of structure, that, you know, there's always a measured approach, right, when we're talking about investments. So although the board will have numerous conversations around ideas and directions or even value sets around how we are investing, there is a very measured annual look, right, at how we're investing, because we're not day traders. We're not trying to like play the market. Right. And so understanding that there's always this measured, tempered, you know, approach to make sure that we're investing prudently, wisely, but with the benchmarks and the parameters that have been set by the board.
Regarding the 2025 education trustee opportunities, is it where it would be you, Vjoy, or Ryan to be the intermediary or the main contact to reach out or be in contact with the various entities to see if it makes sense for us to? Would be Ryan?
We'll have that discussion as an ILM committee and decide who should be reaching out. So to answer your question, Trustee, we haven't moved forward on any of the proposals yet from Vjoy. This was just to show that, and we did send out an email from my staff saying that we're going to identify future training activities. So once we do get the final dates and everything together, we would like to participate in the future because I know Common Fund has been the trend all this time. And so we want to definitely explore other options moving forward. And so, yeah.
You know, when I first came onto the Office of Foreign Affairs, the chair at that time provided a 1 to 2 pager of the different options of investment training that we as fiduciaries could exercise through the year. And I think this is kind of a glimpse back to what that was. And so the trustees can see what the options are, and then we can be advised by our various people on how this best matches how we're going to choose to move forward with our investments and our commitment.
Of course. Yeah.
Yeah.
Thank you, Trustee. Vjoy, you can wrap up.
I'm Pao.
Wow. I didn't expect that. Thank you. Any other questions, trustees? No? We're good? Call for adjournment? Yeah. At this time, I'm going to ask for a motion to adjourn. Motion made by Trustee Hulu Lindsay, seconded by Trustee Alapa. Appreciate the quality conversations, members. Mahalo. Can I get a roll call vote, please?
Trustee Ahuna.
Aye. Aye.
Trustee Akaka.
Aye.
Trustee Aquino.
Aye.
Trustee Alapa. Trustee Galutario.
Aye.
Chair Kahele. Trustee Lindsay. Vice Chair Wahe'e.
Yes.
Chair Souza.
Aye.
We are adjourned.
Motion passes. Mahalo, members.